Welcome to the Singapore Management University podcast series, where we feature the latest insights and perspectives from our faculty. Mutual funds, or unit trusts as they are better known in Singapore, is an investment tool commonly available to private and institutional investors. The challenge for investors has always been to select funds worth putting one's money in. This has generally been based on a fund's past performance relative to the benchmark index. Assistant Professor Aurobindo Ghosh from the Lee Kong Chian School of Business and several SMU Finance faculty members have undertaken research on the role of corporate governance in mutual fund performance. They have proposed an objective data-driven corporate governance score. Assistant Professor Ghosh and his co-authors produced a series of papers on how corporate governance scores can be used to enhance prediction of long-term performance of mutual funds. One of the papers, titled Grades Matter in Performance, Morningstar Stewardship Grades and Mutual Fund Performance, won the Fund Management Prize at the Financial Markets and Corporate Governance Conference organized by the Queensland University of Technology in April this year. In this podcast, Professor Ghosh shares with us the key findings of the research and its relevance to the man in the street and the financial industry. Professor, could you tell us why the team chose to research this topic? Why is the study of corporate governance of mutual funds important?
Mutual funds, as they are called unit trust in Singapore, is a multi-trillion-dollar industry. So with corporate governance of individual industries being more of common interest, mutual fund corporate governance did not get as much interest from academics or from the common man or practitioners. So consequently, because of this lack of supervision, quite a few mutual funds in around 2002 had bad practices. For example, they gave preferred clients access to trades when the prices were actually stale. Now this caused a significant distress, if I may, to uninformed institutional investors as well as retail investors. Now, consequently, what happened is the US Congress and the SEC has enacted laws to prevent such abuses. And so they looked at practices of mutual fund. Now we have about 10 years of data to look at whether they were effective in reducing those practices and also to predict future fund returns.
What were the key findings of the research?
There has been this very long-standing issue with corporate finance that there hasn't been a very strong empirical positive association between corporate governance and performance. Now we are trying to address this question with evidence from mutual funds, particularly because mutual funds are cleaner in asset structures to some extent. But what we find that in the presence of past returns, corporate governance practices seems to play a very significant and positive role in both long-term and short-term performance of such funds. So we proposed a new objective score related to Morningstar Stewardship Grades, a subjective corporate governance score that they created, and different components of the governance that includes board quality, corporate culture, regulatory history, managerial incentive, and fee structure to predict such returns. Now, stewardship grade is inherently a score that is given to mutual fund companies to see how good they are doing in maintaining communication, in maintaining the quality of the board, that how good the decision-making structure is, as well as how good the incentive structures that are given to the managers, so that they look at the interest of the investors rather than their own personal selfish interest, so to say, as well as what type of fee structure they offer. Morningstar, which is a huge company maintaining databases, collected all these and put them together in a subjective manner to create what was known as a stewardship grade, a grade which will help investors choose a company in terms of their performance of how their corporate governance practices rather than just performance of their shares.
How would businesses and the man in the street benefit from this research?
Selection of mutual fund is a very difficult problem because now individual investors have to look at two different things which can mutually confuse each other. One of them is whether it's an innate ability of the manager for doing well, or is it just simply luck that prompted them to get good returns. So this really confuses a lot of investors, and they might shy away from mutual fund investment and go for something else like direct stocks or even derivatives, which might inherently be riskier than investing in some mutual fund. So to some extent, our purpose in this research is to try to identify or separate out this luck and ability framework in this particular research.
How can Singaporeans stand to gain from this research?
Singapore, as we know, is an economy which is well known for its savings practices as well as the informedness of the Singaporean investors as well as consumers. So consequently, they've suffered the same problem as other investors in other countries, that they have no real way of determining future returns of a mutual fund or a unit trust without having more information. So we are trying to provide information which will help Singaporeans decide which will be a fund they can select, not just based on past performance, but also based on good practices. And that might actually improve the performance in the long term of the investments that they're making, maybe for their retirement or some expenditures that they expect in future.
Give us an idea of how you would apply these findings to the financial industry in Singapore.
Corporate governance is somewhat like a good hygiene practice. So when one company has good practices or what we call best practices, then other companies will also follow suit, and this might create a better corporate governance environment in the whole industry. Now, financial industries are often excluded when we do research in corporate governance practices of firms because of the nature of those companies. So in this research, we are trying to identify what are good practices and also help the mutual fund companies to have better practices which will be beneficial both to themselves as well as individual retail investors.
Thank you, Professor.
Thank you so much for having me.